Hello, everyone. Welcome back. Happy weekend. Hope you guys enjoying the time off with your friends and family, just relaxing. Today, I want to talk about what, as crypto holders, we need to be prepared for. I'm looking at these signs all over the world. I live in the US, even within the US, and the future is not looking too bright as far as the economic outlook. So, I want to talk about the things that I'm seeing and things I'm doing to be prepared because I do believe there's opportunity for generational wealth within this time period. But we have to take the proper actions. If this is something that interests you, please stay tuned to the end and see what I recommend. Recommend for myself because I don't give financial advice. Anyway, it's your first time looking at this channel, just coming through. If you find any value within the content that I'm talking about, please hit that like button. And if you want to continue to see more, please subscribe to the channel. And please hit that notification bell to be notified when I come out with new content. So let's get into it. So we're looking at the overall crypto market today. We are under $1 trillion market cap, more specifically 976 billion. So we did go down. However, today we did increase by 2.5%, but we still, the goal is to be over that trillion market cap, and we are currently under that. I mean, it's not to be surprising that we are in a bear market, so this is what happens. Today, at the time of this video, we are in the green. Yesterday, not so much, but today we are. But if you look at the increases, Bitcoin, up 2.5%, ETH, after some haircuts, they're up 2.8%. So, we're making some gains. Next, we want to look at the fear and greed index. All week we were in the fear. Now we are in extreme fear. And it could be possibly about what I'm going to talk about in the upcoming slides, but things aren't looking that great, and the market sentiment is reflecting that. So, we were at extreme fear yesterday, extreme fear now. Last week we were at fear. So, things are looking bleak as far as, how people feel about the crypto market. So looking at the coin market cap, looking at, the 1 to 10 coins here, we're looking at overall for the 7-day, Ethereum's down 15.3%. Going down, BNB's down 5.28%. XRP is actually up 6%. Cardano down 5.2%. Solana's down 4.8%. Doge is down 3.8%. Going further down, Polygon looks to be about even. I'm sorry, not Polygon. Polkadot is about even. Polygon's down 8%. I'm surprised by that. Shiba Inu almost down 10%, Avalanche down 9.5%, Cosmos up 3.5% with the 7-day. So let's see here. Ethereum, Uniswap's down 8.9%, Litecoin down 8.5%, Chainlink, not that bad, 0.02. Near Protocol down almost 10%, FTX coin down 10.4%. So it's consistent with the extreme fear, sentiment. That overall, we're in a bear market, so this is going to be choppy. You're going to have some rallies, and then you're going to have days like this. I get it. Now, what I want to get into is things that I'm thinking about, what I'm seeing, and that's impacting how I want to invest in the future, especially in crypto. FedEx, the CEO warned that of a global recession, and that took a hit as far as their stock goes. It's been down over 10% since he made this an announcement. He's saying that based on what he's seeing, the overall profit and their expectations for the quarter is going to be down because he's seeing things that, concern him. He's cutting his sales forecast by $500 million. He goes on to say that he's seeing a decline in volume of freight and is handling every region around the world. While he said U.S. consumers are somewhat protected by the strength of the dollar, which is increasing their purchasing power, he also said he's seeing a slowdown in American spending as well. Now, I look at that, they have their finger on the pulse as far as what's going on in the US and worldwide because they deal with all of that. They see commerce being, shipped to and from. And if he's seeing a decline, that should be concerning. And I've been talking about this in my past videos. If you look at videos from months ago, I've been talking about global economics and macro is not looking good. And we should all be prepared for this. So this is not a doom and gloom video. It's just a preparedness video. You want to make sure you're on the right horse and being smart with your investments. And at least that's what I'm trying to do. And I just want to share my thoughts with you guys. Next, if we look at the 30-year fixed mortgage, last year around this time, fixed mortgage was around 3% for 30 years. Now it's at 6%. Who is that impacting? It's not impacting the ultra rich. and it's impacting the middle class. I mean, the middle class is the backbone of the U.S. economy. Economies all over the world, and they're the ones that are purchasing homes. And if they can't afford homes, that's going to drag down this market. Real estate is the last. It's a laggard as far as you see things drop, and right now we're starting to see come to fruition. So now the 30-year fix is about 6%. And go on, you see the mortgage applications in the U.S. fell 1.2% in the week ending September 9th, a fifth consecutive decline as a 30-year mortgage hit 6% for the first time since 2008. And we all know what happened in 2008. Applications to refinance a home loan went down 4.2%, offsetting a 0.2 rise in applications to purchase a home. Next, this is from Charlie Biello. The monthly mortgage payment on the median home for sale in the U.S. has increased by 42.5% over the last year. That means, to put it in numbers perspective, $1,674 to $2,385 as mortgage rates have moved from 2.86% to 6.2%. Who's going to afford homes? I mean, if you're, just getting by, you're already living paycheck to paycheck, that American dream with these interest rates are just getting further and further away. And it's all over the world. I shouldn't just say American dream. We all dream to have a house, raise a family, and have a secure home, secure neighborhood for our kids and our families. And interest rates right now are this amount. And given the CPI number that just came out, the interest rates are going to continue to tighten or raise, and Fed is going to continue to tighten. And I don't see it getting any better. So if, these prices continue to go up as far as mortgage rates and inflation continues to go up, I don't see that people are going to be spending money on luxuries and, speculative assets as they once did back in the day when money was plentiful and everything was flooding the system. I just don't see it. So that's mortgage payments. Now we go into credit card balances. So again, with things getting more and more expensive, and people still wanting to buy things that they're accustomed to buying, they're starting to put things on credit. And if you look at this chart here, measured in billions, you'll see here that we're almost approaching the high. And 2019 or 2018 quarter three, you see we were about above 900 billion, right? And look at us now, quarter two, 2022, we're approaching that. We're almost at 900 billion again. Now, you put that with the tightening and the raising of interest rates and credit card. If you look at those APRs now, they're pretty high. It's going to be even higher. Then you're going to have crazy credit card statements where people are trying to choose, okay, I got to pay the minimum, and that minimum is going to keep raising and raising and raising. You have inflation still out of control. People are going to start choosing. And it's going to come down to necessities. That's what they want, necessities. So luxuries and speculative assets, I don't know, they're going to have to choose. And I don't think the money is going to be flowing into these things like they once did. Next, we have the Russia-Ukraine war. So if you heard in the news this week, Ukraine has got some ground on Russia. So the land that was once occupied by Russia, they're coming and they're taking it back. And I don't know, just my opinion, I don't think Putin's going down like that. I don't think he's the one to say, okay, I took this L, let me just back up and regroup. No, I don't think that's what's going to happen. And who knows what he's going to do. So we got to watch that as well. So right now, Ukraine is doing their thing, and they're resilient people, and that's awesome. They're showing they're not going to be bullied. But when you're dealing with a dictator like that, I don't know what he's going to do. So that's something to keep in mind. And if he does something crazy, that's going to impact the markets. I mean, because Russia and that Ukraine, that whole region, they control a lot with their grains and oil and everything like that. That's going to impact. So we got to keep an eye on that. To talk about Russia and what they're doing with the war, we have to talk about them and their fuel and what they're doing with oil versus Europe. They shut down the main pipeline. At first they said it was maintenance, and then they just shut it down blatantly and just said that's what it is. And right now, the Eurozone, they're scrambling to figure out what they're going to do. We're coming and heading into the winter months. October is coming around, and once you hit the end of October, November, December, January, things get a little bit sticky. And, Germany and these other countries, they're taking steps they see what's coming. They're taking steps to kind of protect their citizens. But, it's still an issue. And prices are going to increase. Inflation's out of control over there, too. And then you have people, and, I know that people in Germany, Switzerland, they're all into crypto. But if they're having to raise fuel prices and the cost of goods is still high, what they once used to put in the crypto, is that going to shrink? Is that going to slow up? That's going to impact it. To me, that's what I think is going to happen. So it's something that I'm looking at as well. Then, as far as a breakdown, as far as who, relies on the Russian gas supply, you see Hungary, Slovakia, all these countries here, Italy, Germany. And as you go down, it gets less and less. But these countries that I just mentioned, there are allies in crypto, and they're going to be impacted if this happens. Then we have China. China's the second largest economy in the world, right? And 70% of the wealth is in real estate. And right now that is in shambles. The greatest or the biggest, property company out there, Evergrande, they just defaulted on a 300 billion loan. And China, they're not going to go down without a fight. They're going to try to put more money into the system and prevent this from happening. But in China, it's not like the U.S. In the U.S., you see a home, maybe you go to Lennar or Custom Builder, whatever you do, you put a down payment, and over time the house is built, and once you see the house is built, you sign the paperwork and you go on with your mortgage payments. In China, no, before they even break ground, you're just paying the mortgage and mortgage with the hope that the home will be finished at some time. Well, here, people are paying mortgages on homes and buildings and condos and stuff that's not even built. It's just there. It's a shell. And they're still making these payments. So China's going to go ahead and try to put in some money into the economy, but the citizens aren't going for it. They're going to lose trust in the government. And if they do that, they're going to revolt. We've already seen some bank runs that happened a couple of months ago. And China just put a kibosh on that. And some of the biggest banks saying that you can't get your money or you can take a percentage of your money out. At some point, they're going to revolt on that. And China and U.S., as far as business relations, are very intertwined. So if that economy takes a hit and it goes down, you better believe it's going to be felt over here as well. And not just U.S., but all over the world. They're a big economy. So whatever happens to them, and if it's negative, it's going to impact others as well. So that's something that I'm also watching and keeping a close eye on. Then we have crypto regulation in the U.S. That just came out. The Biden administration said that they want to, regulate it. And regulation of crypto is good because there's a lot of people that lose money over foolishness. A project comes out, you invest in it, and then all of a sudden it's a rug pull. So we do need some regulation. I think regulation can help big, companies and stuff like that come into the space. However, right now, it's very vague what they mentioned. They did mention, securities, what they label as securities, and that has me a little bit concerned. We know that the XRP right now versus SEC is going on, and originally it was deemed that Ethereum was not a security. However, since switching over to proof of stake, things may change a little bit now. Now they may say it might not be as decentralized as it once was. And if Ripple loses that case, what's going to happen to the other cryptos? Can they say there are securities? And if you're a security, in order to conduct business in the U.S., you have to meet X, Y, and Z. Maybe some companies say, hey, I don't want to deal with it. And that's it. They just don't do business in the U.S. Who knows? We saw what happened with Tornado Cash. That happened, and they had OFAC involved, and then a lot of those projects were shut down. I don't know. I'm not saying this is what's going to happen. This is what I'm thinking about. And lastly, they're creating a CBDC, central bank digital currency. And, if that's happening, then as far as crypto goes, that's the biggest competitor. They want to, basically, they're trying to blow up the fiat system, and then create digital dollars. And that way it could just be plentiful. That's what I think. It could be plentiful. And if it's plentiful, then they can control how much they do and how much they flood the market. And they can control, see what you're spending it on, give you some type of grading and all of that. And I don't like that. That's kind of, it's controlling. China's already doing it. I don't know that it's getting much traction over there. And next we see Europe. They're also looking into doing it. And, they're thinking by 2026, if they're in no major setbacks, they're going to have it as well. So in my thinking, I'm thinking, all right, so all these central banks, they're coming out with digital currency. Crypto's already that. And right now, banks cannot compare with DeFi. DeFi, you're getting 5%, 8% APR, whereas your bank here, you're probably getting 1%, you're not even, but 0 point something versus 5, 8, 10%. They can't compare with that. So if this is happening, it's the start. What do you think is going to happen with regulation and their biggest competitor as far as DeFi? And I know that bankers and politicians, as far as campaigns and everything, it's all funded. It's all intermingled. So, that concerns me. But we'll see what happens. This is just me talking out loud on YouTube. Next, I want to talk about Harry Dent, who has a Harvard MBA, and he correctly predicted the Japan's 1989 bubble bust and recession. He also predicted the dot-com crash. He also predicted Donald Trump's presidency. So he has some clout as far as his predictions. People aren't always correct, but I listen to a lot of different aspects, a lot of different opinions, and his kind of coincided with what I'm concerned about. He went on to say that the truth or consequences, you're going to be down in your stock portfolio 55 to 60% or more, wondering why you weren't more cautious when the market had the biggest bubble in history. He also recommends moving all risk off the table for 2 years, then being ready to reinvest at the sale of a lifetime of all financial assets. So, in closing, I know I talked about a lot of things that sounded like doom and gloom, but for long-term investors like you and me, this is the time to be just prepared. You want to prepare for the worst and hope for the best. But this is when generational wealth this is when it happens. I remember, and the reason I started this YouTube channel is looking at all these people during the last bull run talking about crypto and how it changed their lives, how they didn't have to go to their 9 to 5 anymore, and their spouses didn't have to worry about money anymore, and they weren't in that rat race. And when I saw that, I was like, I have to figure out, I have to learn about this crypto space and see what's going on. And Bitcoin at the time was in the 60,000s, and I was like, wow. Ethereum was in the 4,000s. Now these prices are coming down, and based on everything I just said, I see it going down any further. And I want to be in a position once it goes down that I'm going to be there to get what I always wanted and get it at a cheap price. And the next bull run, I could be here, and I could be one of those people that are looked at and people will think that I'm lucky, but no, I wasn't lucky. I just paid attention and I looked at projects, and I basically, made sure I was investing in the right things. And now, then I'll be where I want to be. So breakdown of what I just said is basically U.S. inflation rate came in at 8.3. Powell, said as long as inflation runs hot, he's going to do whatever he can to control it, with the exception that he have to make sure that the job market is still strong. Job market is still strong according to them. So the market is predicting it's going to be a 75 basis point hike. Some are even saying a full point. I don't see that, but 75 is probably what it's going to be. And then again in October, another increase. And all that's going to do is impact, what we talked about as far as mortgages. It's going to be tougher to get money as far as loans go. And I think, people are going to start choosing what's more important in life, So we'll see. Pay attention to macro and global events, the things I just talked about and more. Don't just, look at YouTube and look at crypto, but you want to pay attention to see what's going on, see how it can impact your portfolio. And, that's what I do. And I encourage you to do the same. And then based on that, form your own opinions. Inflation is not just a U.S. issue, but worldwide. Tightenings all over the world. Less money to spend on luxury goods and speculative assets. This should have been the first one, but most importantly, get all your crypto off exchanges. Get a cold wallet, do a MetaMask or do something like that, but not your keys, not your crypto. You don't want some exchange to go down for some reason and then you lose all of that. I always, that's what I do. As soon as I get stuff, if I'm not about to trade it or sell it, it's on a cold wallet and I just protect myself. And, I'm holding my cash right now in stable coins. Whole coin, I want to get a Bitcoin. And I think with what I'm seeing happening, it's a possibility that Bitcoin can go sub 10,000. I'm not saying it can happen, but I'm preparing for that. And if it happens, great. I was ready. And if it doesn't, hey, I could DCA too. It's all good. But my goal, not your goal, but I do want to be a whole coiner. If I get more than one, that'd be awesome. Because I think Bitcoin is a generational opportunity that comes once in a lifetime, and I want to be on board. And lastly, keep the faith. Generational wealth it happens during bear markets. When everyone is scared, this is when you want to be prepared and you invest in what you like. And then once you come out of this, people are going to look at you and say, wow, look at him. What did he do? I want to do what he wants. But it wasn't easy. We have to stay around for times like this, and especially if times get worse. So guys, that's my video today. I hope I didn't discourage you guys. If anything, this is a video of hope. Just be aware of what's happening and make sure that you're in the right position to take advantage. So have a good weekend. I hope you enjoyed the video. If you do, please hit that like button. And if you want to continue to see more of my content, please subscribe to the channel. It means a lot. And hit the notification bell to be notified when I come out with new content. So enjoy your weekend. Stay safe.